Hey, WheelSnipeSelly here. So this is part two of my interactive Twitter series from ICT's Twitter space on how to win trades. That was back on December 3rd. And we'll be reviewing the seasonal tendencies. I'll also have a, PDF in the description below. So you'll want to watch until the end as I'll be doing a live review into the seasonal tendencies all the way back to 2002 in TradingView. If you haven't already, subscribe. Please take a second to do that and hit that notification bell so you'll get alerted when I push out new videos. It really helps out the channel and keeps me motivated to continue putting these videos together for you guys. I hope you enjoy.
Hear that? Got a bullet point list. ICT's been knocking him off. He's been really focused. I got a bullet point list here. I got some shit talking at the end of this video. Don't worry. The other part is seasonality, seasonal tendencies, the effects of when the market is more likely to produce large range moves on the daily chart. And there's a lot of volatility. As an index trader, you want to know when there are earning seasons. And you also want to be aware that during the summer months, now this hasn't really been true in the last 2 months. I'm sorry, the last 2 years rather. The typically the summer months, and when I say that, it's like July, some of June's good, but July and August, they can tend to be really just cruddy, real cruddy type of market conditions where you don't really want to be pushing it too hard. And it's better really to just take those months off. And that doesn't mean you can't find trades, and obviously you've seen I can do that too. But when I teach, okay, the detractors out there love to try to take one thing that I say and twist it up and try to make a argument out of it. They'll say, ICT says that he doesn't trade on Mondays. And here's my example of trading Mondays. Okay, I go out and trade Mondays. I'm just telling you what I like personally. Now, you can go out there and trade, every single day of the week. I've given you tools and rules to follow doing that. But I like to have a lot of things in my favor before I go out there and just try to engage, because my character flaw and my weakness is I want and aim for perfection. And you see in my entries, I'm in there on those high candles going short. And I'm getting out on those low candles when I'm covering the short. And I'm buying on the low candles and I'm selling at the high candles. You can't deny that. And it's matching everything that I teach. The logic is there. So if the shit didn't work, I couldn't produce that in live market conditions. Period. Gotta wet my whistle here. So understanding when there's the likelihood of having big moves, like for instance in spring, is a tendency for the market to draft lower in equities. Okay, so stock indexes or indices rather, they have a tendency to draw lower and be bearish going into the summer lows, and then going into a low in the fall time, somewhere between. It can, I've seen it in years of my career where it starts a move in August, the last week of August, but generally it's like between mid-September and the first or second week of November. You're going to find a seasonal low there. And all you got to do is look for what I taught you in the core content. If you simply just use that model, look for index divergence, SMT divergence between the NASDAQ, this S&P, and the Dow. I don't trade the Dow. Okay, I don't care about the Dow for trading purposes, but I use it for an analysis. Like dollar, I don't trade the dollar, but I've always used it as a barometer for forex pairs. So it's going to be a diametrically opposed opinion held in dollar versus other currencies. Well, when you're comparing the three averages, S&P, NASDAQ, and Dow, and you're looking for a high to form in the spring, you want to see a divergence. One of those indices is going to fail to make a higher high. That's it. You have now witnessed the quarterly shift. Now, everything after that, start looking for market structure shifts bearishly on all time frames and look for the pattern that I taught you in the 2022 mentorship. And folks, I just fucking gave you an ATM that pays out every motherfucking year, and it gives you the bias going all the way into the summer. That's it. That's the key. That's the fucking unicorn you're looking for. Well, how about in the fall? You're looking for the opposite, because seasonal tendency wise, you're looking for a low to form. So one of those indices are going to fail and make a lower low. Once that occurs, what happens? That failed lower low in one of those averages, that's simple Dow theory. Once that shift occurs and they go breaking their short-term highs, you're now in a buy model. What does that mean? You're just looking for longs, and you keep milking the longs with the largest leverage. And you can take shorts, and you've seen me do that. But the bigger moves, the longer protracted candles on the daily and 4-hour charts are going to be to the upside after that occurs in the lows in the fall. So between like I said, think like the second week of September to the second week of November. That's your little sweet spot. And what you're looking is you're studying kind of. You're like, can you back and tell me what you just said there again? I ain't looking at questions, but I'm sure it's probably what you're thinking. What does it look like? Where am I looking? What time frame? You're looking at a daily chart. You're looking for the highs compared between the Nasdaq, the S&P, and the Dow. Make sure I said that right. Those three averages: Dow, S&P, and Nasdaq. In the springtime, okay, April, May time period. In that time period, you're going to be looking for, as the market's going to be going up, it'll go up, and on a daily chart, one of those averages, and I don't give a flying fuck which one it is. I don't care which one it is. It's not a point of me knowing which one's going to fail to make a higher high. I'm just looking for that to occur. Once that happens, once that occurs, and then you start looking at the 1-hour and 4-hour chart to look for a shift in market structure, just like I taught in that 2022 mentorship. Once that occurs, you have watched the seasonal high form in the spring, and it's all downhill going into the summer months. Baby, if you don't know what that means, let me tell you something. Go back to your fucking charts. As many years as you fucking want, and just see how that is such a beautiful roller coaster into fucking profitability every motherfucking year. And you got clowns out there doing mentorships and signal services, and they're trying to buy all during that shit. And they're getting wrecked. They're getting destroyed, blowing out, and having to reset their simulator accounts. That's how the markets work, folks. And in the fall, on a daily chart, you're comparing the Nasdaq, the Dow, and the S&P. One of those averages are going to fail to make a lower low. All you're doing is simply waiting for that. You're simply waiting for that to occur. And once it does, go into your 4-hour chart or 1-hour chart and start looking for that shift in market structure bullishly. Once that occurs, you just watch the low form in the fall and just start looking for your best trades going long. You can, if you have not been trading at least for 2 years consistently, don't fade what I just gave you. Trade only in those directions. And you're going to get the biggest fucking moves you've ever had in your trades. And you'll be able to trust that they're going to move a lot more than just 5 trade Larry in fucking Texas that wants to get 5 ticks and thinks it's a big deal because he's got 24 contracts on it. No. Mm-mm. You want big fucking runs, big price runs. And I have students that are going in the Robbins Cup. I just gave you a beautiful blueprint to work within. Think about that. These are market dynamics that, I'll have people come in. Oh, everybody knows that. Okay, show me your fucking trades. Show me your executions going into next year. Do it. Because I'm going to be doing it. Oh, yeah, I'm going to be fucking doing it. Live accounts. Oh, yes, I'm going to be breaking fucking hearts. Motherfuckers are going to have their heads fucking smashed. Yep, your results are shit. I'm going to prove it. So we've talked about market structure. And the only importance really is knowing what I just gave you. That right there, that element of seasonality and how those shifts quarterly occur, one in the springtime for bearishness and in the fall when it's bullish. And what does it look like? The SMT divergence or Dow divergence, okay, where one of the averages diverge. And then you're looking at that shift in the market structure on a 4-hour and 1-hour chart. Once that fucking occurs, that is it. It's on lock. It's done. Then it's going to start grinding higher. You don't think it happened? Look at your chart. Why do you think I've been buying? Well, I've been talking about it's reaching for relative equal highs. It's going up to an imbalance. This is SIBI. It's filling. That's why. That's why it's following that model. Those videos I produced in 2016. Well, no, technically that would have been 2017. Yeah, because it's closer to the August end of 2017 when the first mentorship group ended, and that core content was produced during their class. So yeah, it would have been, if I'm not mistaken, I think it's June. I don't know. I don't recall. I'm having a senior moment here. It's in there, but it's on YouTube now. But where I'm teaching how to find these like mega trades. Larry Williams coined a phrase called mega trades, where you find these big extrapolated price moves. And I was like, I want to know where they form, because in his teachings and such, he would show this and that, and I was part of this and I was part of that, and it didn't make any sense as to what was the real foundation of when did they occur. So I had to take a step back, and I said, okay, I'm going to go through all these fucking charts and run through with Supercharts, which is a program I used when I was a younger man, and TradeStation. And I ran all these filters through to find where there was a huge impulse for the markets to be sustained one direction for months. And when it was bullish, going up for months. Now, maybe there were, traders out there doing this, but nobody ever told me about it. Nobody said, only do this, because that's kind of boring. And nobody wants to write a book like that. They got to put 50 fucking indicators on there and different fucking harmonic names on shit, because that makes it, scientific. And if it's scientific, for fuck's sake, that means your in-laws are going to be impressed, right? So the only thing you need to know about market structure is those two things I just gave you right there.
All right. So if you've made it this far, you've made it into the good stuff. So as I said, I'll link this this PDF with all the slides in the description below. But just to review, so the spring seasonal tendency, we're looking for SMT divergence between the Dow, Nasdaq, S&P. One of these should fail to make a higher high between April and May, and then we'll tend to draft lower and be bearish into the summer lows, and then a low into the fall time frame. And then for the fall seasonal tendency, we're looking for SMT between the Dow, Nasdaq, S&P. One of these should fail to make a lower low between the last 2 weeks of September and the first 2 weeks of November. Sometimes it could start to move the last week of August. So here we are, 2002. Trading View, I do have the Pro, the highest level of Trading View that you can get, and the daily data goes back until 2002 for the Dow. So this is kind of where I started. So you can see here also I have this seasonality month. Basically, the gray is going to be April-May timeframe, and we're looking for a higher high failure. And then for the fall, we're looking for a lower low failure between like September, October, November. So that's what these are. It'll help us kind of see these a little bit easier. So if we're looking here, we are in, let me go back. There we go. So this is in the April timeframe. So you can see we failed to make a higher high in the Nasdaq, and so we start to drift lower after that into those summer months, and then just kind of calling out in August, we failed to make a lower low and had a kind of like a movement up higher, but then within our time frame, we are seeing that the Nasdaq failed to make a lower low, and then we had the surge into the end of the year. So this was that's a pretty big move right there. So we're going into 2003 now. This was a pretty bullish year from what I can see, and we didn't really have a higher high fail and then drift lower. So I didn't really mark anything there. And I'll kind of make these a litof bit better. Yes, some of those screenshots that I have in those PowerPoints is kind of hard to see. So that's why kind of watching this will be helpful, so that you can kind of get a better idea of what's actually happening. So we had our failure. So we in the fall we failed to make that higher high here, and then we had basically a run up into the end of the year. And so we are in 2004 in the spring. So I kind of marked out two here because we failed to make a higher high, but we did on the S&P, and then we had a move lower. And then again, it kind of came back up we made a higher high in the NASDAQ, but failed in the Dow and the S&P. And then we had basically our retracement into that summer month time frame. In the fall, we failed to make a lower low in the NASDAQ, and then we surged higher into the rest of the year. So that was right around the end of October timeframe. And we're in 2005 now. So this is a little bit before our time frame, but just wanted to kind of note this because we had a big move lower. So we had a failed higher high in the March time frame, and then we kind of drifted lower. And then I have another one noted here within our time frame that we failed to make a higher high, and we had movement lower, and then just kind of consolidated and retraced back up into the summer months. In the fall, this one wasn't as clear to see on this one, but we failed to make a lower low in the NASDAQ and the S&P, and we made the lower low in the Dow, and then we basically ran pretty much we ran for the next 6 months after that. So here we are, 2006. In our time frame, we failed to make the higher high in the NASDAQ, and then we drifted lower into the summer months. So that was a nice seasonality SMT right there. And in the summer months, so I didn't see a lower low. We were pretty bullish in 2006 and the last quarter of the year. So I kind of called out the SMT that was made in July. So we failed to make a lower low in the S&P, and then we just grinded higher for the next 6 months. So that was a solid move there. And I'll kind of show more of those. Like if I'm not able to find anything in there, I'll try to note where I see like the nearest SMT that could have given us a signal for that seasonality shift. So in July, like I said, we didn't have anything in the spring where we made we had a higher high fail and then we drift lower. So it was pretty bullish there, but we failed in July, the middle of July, where we made a lower high here. We had a higher high and we had a lower high. So we failed on the NASDAQ and the ES and had a huge movement lower down into the middle of August. And then we kind of retraced back up from there. And then in the fall, we failed to make a lower low in the NASDAQ, and we just kind of grinded up from there. It wasn't a huge movement, but still wanted to note that. And then so here we are in 2008. So we're in the spring time. And we made a higher high in the beginning of June. So this is kind of right near our window. And then we had a nice movement lower. And 2008 was the housing crash. So this was a nice if you saw this SMT, that is a huge ride into profitability right there, knowing that you're short. And then so since we were bearish that year, we didn't have our normal bullishness in the fall. So with that, I kind of looked to shift my view to the months following. So in March, we made a lower low, but we failed in the NASDAQ, and then we started grinding higher. So this was a nice shift, even though it wasn't in that time frame. If you're always looking, this can give you signals to start looking for that 2022 mentorship market structure shift to the bullish side. So in 2009, there was like a small SMT. I'd say we failed to make a higher high in the Dow and the S&P, and we just kind of drifted lower into the summer months. In the fall of 2009, I didn't see any shift, but I just kind of noted that everything made a lower high. So there wasn't anything that signaled, but typically we're bullish during these months here. So going into 2010, in our spring time frame, there wasn't a SMT that I could identify, but we did drift lower as it normally does. I wanted to note here we failed to make a lower low in the NASDAQ, started grinding higher, and then again this failed to make a higher low, so this was a nice run into the fall. So we had ES and NASDAQ making higher lows, and that Dow failed. So that was a nice run into the end of the year. 2011, we have in the spring, I didn't really see, in the time frame we were looking for something here to go lower. So I did find something where we failed to make a higher high in the Dow. We went lower and kind of retraced back up during those summer months. And then we failed again with the ES around July, towards the end of July. And that was a nice move down into the September, October lows. So in the fall, we failed to make a lower low in the NASDAQ, and then we started to grind higher for the next 6 months. So that was a nice SMT there. 2012, we failed to make a higher high in the S&P, and the NASDAQ had a nice movement lower, then kind of consolidated over the summertime. In the fall, we failed to make a lower low in the S&P and grinded higher. This was towards the end of November, so this was a later one, but this grinds all the way up until basically the middle. Actually, it just kind of keeps going. So 2013, in the spring, this was a small one. We failed to make a higher high here, had a little bit of movement, and then just kind of consolidated. In the fall, we failed to make lower lows with the S&P and the NASDAQ, but we made it with the Dow. So there's our SMT, bullish all the way into the end of the year. In the fall, so this was in January. I just kind of wanted to note this because you can see, I'll get to it here in a second, but we failed to make a higher high and then retraced lower. And then again, we failed to make a higher high in the NASDAQ, retraced lower into this time frame, and then just kind of slowly grinds on up. And in 2014, you can see here we failed to make, I had to go all the way back to April, but we failed to make a lower low, which it did in the Dow, and then this grinds up through the end of the year. So I mean, we've been seeing that this has been bullish many times, into that end of the year. So I think that's pretty awesome to see. Here we are in 2015 in the spring. We failed to make a higher high in the NASDAQ, and then we failed to. That was right around May, and then again in July, we failed to make a higher high in the S&P and the Dow, and that was a nice movement lower. In our fall time window, I didn't see an SMT here, but we're normally bullish after a low, so this is something that you could just kind of be keeping your eye on. In February, this is a little bit earlier because I didn't. I just want to kind of call this out of maybe using this to kind of catch a run in the beginning of the year, but we failed to make a lower low in the Dow, and it just ran into that springtime. In the spring, we failed to make a higher high in the NASDAQ and the Dow, and then we had a nice little movement lower. Moving to the fall, so this is 2016. We had election year, so every one of these made a lower low and then started grinding up higher. So there wasn't an S&T there, but that bullishness into the end of the year is what we are normally expecting. So you can see here, in the spring, we had higher highs in the Nasdaq, and we failed in the the Dow and the S&P. It's a little bit of a movement lower, but it wasn't a huge move by any means. But this was just something to note. And then in the fall, we failed to make a lower low in the Dow and the S&P, and we made that lower low in the Nasdaq, and then this just grinds higher until the end of the year. So we can see that's a recurring theme there towards the end of the year, something good to watch for. And then 2018 in the spring, this is a little bit out of our time frame, so you can see it just kind of grinds up. But you can see we failed to make higher highs in February and March in the Dow, and then failed to make a higher high in the March for the ES, but we made the higher high in NASDAQ, and then it goes lower and then just kind of slowly grinds up. In the fall of 2018, I have here, since we didn't have anything in the spring, I was just looking for a nice movement lower. So we failed to make a higher high in the ES, and then had a nice run lower. And then here I was able to, I was looking for something in this time frame, but we failed to make a lower low, had a movement up. So that could have been all of those indices kind of went up and then just kind of puked into the end of the year, which is not normal, but like you said, these are seasonalities that these are seasonal tendencies, so it's not always going to be perfect. But in the spring of 2019, we failed to make a higher high and then moved lower into the summer months and then kind of grinded higher. In the fall, we failed to make a lower low in the Dow and the S&P, but we did with the NASDAQ, and then it just grinds higher into the end of the year. So we are in 2020, so this is when COVID hit, and so since we had a huge movement lower, I started to look for an SMT around the April timeframe because we were bullish. So since we had this huge movement lower, we failed to make a lower low in the NASDAQ, and this would have been a nice, this kind of runs that whole year, right? So into the fall of 2020, we failed to make a lower low in the NASDAQ and the S&P, and we made the lower low in the Dow, and we just kind of continued up. We continued up higher, so that's a nice SMT move there. And then here we are, 2021. In the spring, we failed to make a higher high in the NASDAQ. We had a little bit movement lower, just kind of chops around. This was the only thing that I could see here. So, that's still a nice movement down. In the fall, we failed to make a lower low in the S&P, and we grinded up higher into the end of the year. And here we are for 2022. So current year. If you guys were watching the mentorship when I was, the 22 mentorship, we failed to make a higher high in the NASDAQ and the ES, but we made the higher high in the Dow, and this was a nice seasonal tendency down into the summer months. And then you can see it kind of grinds up. And then just recently, we have ICT was saying that, right here, the Dow failed to make a lower low, and just it's been grinding higher ever since that. And then, the NASDAQ and the ES did make that lower low. So if you made it to the end of the video, thanks for watching. I hope this was helpful, educational, going through the last 20 years, seeing these SMT seasonal trends. If you did like this video, go ahead and give me a thumbs up, leave a comment below. And yeah, thanks for watching. I'll see you guys in the next video.